Hello my fans, the knowledge I'm gonna share in this video will greatly help you if you have a trading account, and that's why I recommend one of my best brokers, and that is Deriv.com. Be sure to find the link in the description to get yourself a free account. Otherwise, I stand to welcome you to part 2 of market structure with the real price chart examples. So let's go straight to the charts. I'm here on Euro USD, and this is our high, then higher low, higher high, higher low, PMS right here, higher high again, higher low, equal highs or double top without BMS, higher low, higher high, higher low, price ranges or consolidates here, no BMS, and then we have a change of character because we can see lower highs, lower lows, lower highs, lower lows. Let me do some illustration to show you what I was trying to mean. So here we have our higher low, BMS on the left high, and before we break the next high, we see minor highs. This one here, and this one, and this last one. As I told you, we consider the last one that led to break in market structure. So this is BMS right here. Then higher high, higher low. Price creates liquidity using double top, following retail traders who is me and you to sell, as indicated in that red arrow where there is no BMS. Then the BMS is reflected on the third touch after creating a higher low that creates a new higher high. Then the uptrend continues, a higher high, higher low, until we see this range right here. The high is intact like the low, and within the range, price begins to create internal structures where we see change of character or choke until the major higher low is broken, and we begin seeing lower high, lower low, lower high, lower low, lower high, lower low, which signals a change in trend direction, and that is a downtrend. Getting back, as I said, we buy in discount zone, and if I take my fib level, you can see price tapped into the discount zone, which is 50% to 61.8 fib levels, which are also called reversal levels. And then I skipped the range. Remember I told you, if you want to buy in range, you buy in a deep discount, and if you want to sell, you sell in deep premium. Thereafter, I went on the downtrend side. Note that when you are drawing the fib levels in an uptrend, you begin from the higher low to the higher high. In a downtrend, you begin from the lower high to the lower low. On the downtrend side, price didn't reach the premium side, and for us to sell. So note that sometimes price does not reach the discount or premium, but there are other confluences you consider to take the trade, and I think I will cover that on future videos. The second reversal, price reached in the equilibrium level, 50% of the range only, and continued moving down. So you have to consider the current price behavior as well. So we have two types of ranges, that is unclear range and clear range. So with unclear range, price will be moving straight away from the discount zone to premium zone, from premium to discount, discount to premium, like that choppy market. But with the clear range, price will be having other minor structures within another trading range, where it will be creating like higher high, higher low, higher high, higher low, or lower high, lower low, lower low, lower high, like that. Okay, so that's a clear range. So here we have an example of a clear range with minor structures inside. Mark the swing points, that is the highs and lows, using the trend line, and see how price is trending up and down with break of minor structures inside, but the major swing points marked with the red remain intact. There we go to examples of a clear range. These are our major higher low and higher high, and you will notice no BMS, no break of market structure, both sides on the higher low and the higher high. So that tells us we are in a range, and as you can see how messy it was inside. We go to the next example of a clear range. Price comes down, goes up, comes down, goes up, comes down, goes up, not clear. Even this one, price is ranging, coming down and goes up, comes down, goes up. Same case here, price is reaching the deeper discount and taps into premium, drops again and goes up, drops again and goes up, and continues like that. Let's look at these 6 types of ranging setups. The first one makes a clear move, price comes to discount to make a higher low and ranges a little bit, and then continues the uptrend to make a higher high. Number 2, higher high, higher low, then price ranges in discount, then moves moves up. Number 3, price ranges in premium, then grabs liquidity below on the higher low, then rallies up. Number 4, it is a bit complex to some traders. The buy side liquidity is not taken out after range, but price continues the uptrend, making a new higher high. Number 5 is a Judas swing. Price ranges in premium, then takes out liquidity from the upside, sell side liquidity rather, and drops down to take out liquidity lying at the bottom, what we call buy side liquidity, then continues upwards move. Number 6, which is the last one, price ranges in the premium and then drops to discount. From discount moves upwards and then in a range, but final break structure. Let's see, this is your higher high, higher low, higher high, then price ranges coming from discount. See the low that led to BMS. So when your key higher low becomes the one that led to BMS, that one or this one here is what we call a major higher low. For emphasis, this is how I determine my BMS or breaking market structure. I consider the first example where we have a candle closure above the already high. So the swing high is the wick or shadow, but the break of structure, I consider the candle closure above the wick or candle high. The second example, only the wick broke above the already high. I personally don't consider that, but rather rejection. For higher low, higher low, higher low, and lower high, lower high, lower high, we usually use 4 hour and 1 hour time frames, but on rare occasions this will be on 4 hour, but our 1 hour will be like this. So if you see 1 hour is different from 4 hours, stick to 4 hour. If you sometimes say BMS or breaking market structure on 1 hour, check if there is a BMS on 4 hour. So let's look at reversals. If your daily is bullish to make a higher high and is coming back to make a higher low, we are looking for these types of reversals, and that is type 1, type 2. If this is a daily trend and you go to lower time frame, that is 4 hour and 1 hour, you are going to see a higher high, higher low, higher high, higher low, and you are going to see this on daily. When you see daily like this on lower time frame, you will notice this upward movement in a zigzag. When daily goes from uptrend to a downtrend, you will see higher high, higher low, higher high, higher low. So type 1 is to BMS, break market structure to go high, and break market structure to go low. BMS to make a higher high, and BMS again to make a lower low. So we were expecting higher low here, then price goes up, but there was no higher low. There was a break of structure. So in an uptrend, as you can see, price was breaking the highs. Break high, break high, break high. But then now price breaks the low. So this is our type 1 reversal. And this becomes the lower low, lower high, lower low, lower high, lower low, lower high. That's the downtrend. Type 2, higher high, higher low, higher high, higher low, higher high, higher low. No new high. There is no new high here. Break of structure to the downside. So there is 1 BMS on type 2. So you can see the difference on type 1 and type 2. This is our type 1 and type 2. So that's what you are going to see here. Okay, when daily changes direction, either you see type 1 or you see type 2, right? Now you can compare the swing high on daily and that of lower time frame with type 1 and type 2 reversals. So let's say the daily comes down to make a higher low, then it's going back up to break structure. So what you are going to see here, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, BMS. So again 2 BMS, 1, 2 BMS, then BMS again, and price begins to create higher high, higher low, higher high, higher low. And on the other side of type 2 reversal, you can see that price is creating lower low, lower high, lower low, lower high, lower low, lower high, then with 1 BMS, okay, and begin to create a higher high, higher low. That's the difference, right? So on a higher low, that's the difference, as you can see, right? Also with the reversals, we have type 1.1 and 1.2. What's the difference? This only applies to type 1. It does not apply to type 2. So type 1.1 is this one, with the clear BMS up and clear BMS down. 1.2 is going to be like this. So this one right here is not a BMS. I mean as you go up, but it's going to be a wick of a candle. Price will go above the high, but then it will close below. That's 1.2. So let's go to the charts. Lower low, lower high. Why is it a lower high? Because there was no BMS. Price did not close above. So this is the lower high. Price comes down, breaks structure with a new lower low. Price goes up, makes a lower high in premium, then comes down. There is no new low. Then to break structure here, so this is type 2 like this, low, high, low, BMS, that's type 2 reversal. Lower low, lower high, lower low, lower high. This is not a BMS. We are still on this low and this high. So this is a rejection, then a range, then a break market structure to the downside. So look, this is the major high that led to the BMS, or breaking market structure. So this becomes our lower high and our new lower low. So this is type 1.1 BMS, BMS. Two BMSs, type 1.1. This one, use your trend line, higher high, higher low. BMS, BMS, 1.1. It looks like this, break of structure up, break of structure down. Type 1.2, use your trend line to mark the swing low and swing high. That is lower low, lower high. This is a wick, not a candle body closure. So down, it's a rejection. Then BMS to the upside, type 1.2. That's why I tell you to use your trend line always to make life easier. Last example, this is the higher high and higher low. Price range is a bit in premium. The first attempt to break the high failed. Price came down, no BMS to the downside. We get an internal range higher low. Price goes up, break structure high. Though not convincing with a smaller candle closure above the already high, but still it's a BMS. And that one means we are bullish. So mark the new higher low and the new higher high. Now you notice price makes the higher low in premium. This time not in discount. As I told you, sometimes price does not come back to discount, right? Price breaks structure again, we are bullish. That's it, my family. If you found this content very helpful, please consider subscribing, turn on the notification bell icon to be notified whenever I post new videos. Give it a thumbs up, a praise. And if you do not have a trading account, I highly recommend that you sign up with my best broker, and that is Deriv.com. Grab the link in the description to sign up for a trading account.